I considered gold, and then I started studying the two, and then I realized that gold miners are going to produce about 2% more gold every year.
In this video, we are going to hear Michael Saylor, founder of MicroStrategy, talk about the pros and cons of gold versus Bitcoin versus fiat, and why over the next few years we will see exponential growth in Bitcoin in comparison to the others. And remember, if you like this content, to hit the like button on your way out. And without further ado, let's jump right in.
Right, but if we look at how many new gold mines, yes, they are still mining gold, but I mean a really big gold discovery. It's been years, Michael.
Given enough money and given enough wherewithal, no one's going to melt down their Bitcoin jewelry to sell at a certain price, right? And the key point here is, if I put $100 billion into gold mining, I will produce more gold. How much more, we can debate. If I put $100 billion into Bitcoin mining, I will produce no more Bitcoin. I will just produce more security, right? It's impossible. Even if you put $1 trillion into Bitcoin mining, it's impossible to produce more than 21 million Bitcoin. All you're doing is making the network better and safer. But at $1 trillion of gold mining, you will produce more gold. We're just going to debate about how much gold you're going to produce.
Do you think we'll see a shift? Because we see central banks buying gold, right? And that was a signal, I would say, at the start of this year and last year, when there was record buying from central banks. Could we see that happening with Bitcoin?
You know, I think that Bitcoin is digital gold, and that means it's faster. I can move it 1,000 places in a couple of seconds. It's stronger. I can pledge $100 million of it for 3 hours in Japan on a Saturday afternoon, right? It's smarter. I can write a computer program that'll slice it in 1 million pieces and do complicated things with it. It's only going to get better every year forever because it's software. And what that means is, people that are attracted to Apple and Amazon and Google and Facebook, because they're smarter, faster, stronger networks, they're going to be attracted to Bitcoin. Logically, that means, by the way, central banks weren't buying Apple, Amazon, Facebook, and Google initially. It'll first be technology investors, then it will be super high net worth individuals, it'll be private companies, it'll be public companies, it'll be the institutions that bought Apple stock. Eventually, Warren Buffett bought Apple stock, but he bought it 10 years after I bought it, right? So eventually and then you read about central banks today buying the NASDAQ today, right? But 5 years ago, central banks wouldn't have bought NASDAQ stock. So maybe they'll get there, but it's going to be a natural adoption cycle with waves of other investors taking the asset position first.